Welcome to our video on investing basics for beginner investors. If you've ever wondered how to make your money work for you, you're in the right place. In this video, we'll cover essential investing fundamentals, including the different types of investments, the importance of diversification, and how to set realistic financial goals. Our aim is to make investing approachable and engaging, so you can feel confident taking your first steps into the world of finance. Understanding the importance of investing is crucial for building wealth and securing your financial future, so let's dive in and unlock the potential of your money. Hit the like button, subscribe to my channel, and please leave a comment. As a beginner investor, it's essential to familiarize yourself with the various types of investments available. First, we have stocks, which represent ownership in a company and can offer high returns but come with higher risk. Next are bonds, which are essentially loans to companies or governments. They tend to be more stable but usually provide lower returns. Mutual funds pool money from multiple investors to buy a diversified portfolio of stocks and bonds, balancing risk and return. Lastly, real estate can be a solid investment, offering potential appreciation and rental income, though it requires more capital and management. Always consider your financial goals when choosing the right investment for you. Diversification is a key strategy for managing investment risk effectively. By spreading your investments across different asset classes, such as stocks, bonds, and real estate, you can reduce the impact of any single investment's poor performance on your overall portfolio. For example, a diversified portfolio might include a mix of large-cap stocks, government bonds, and real estate investment trusts, REITs. This way, if one asset class underperforms, others may still thrive, balancing your returns. As you consider your investment strategy, think about how you can diversify to protect your capital and enhance your potential for growth over time. Setting realistic investment goals is crucial for your financial success. Start by distinguishing between short-term and long-term goals. Short-term goals might include saving for a vacation, while long-term goals could involve retirement or buying a home. Understanding your risk tolerance is essential, as it helps you determine how much risk you can comfortably take on. To create actionable investment plans, consider breaking your goals into smaller, manageable steps. For instance, set specific dollar amounts to save each month or choose a timeline for reaching each goal. By clearly defining your objectives, you'll be better equipped to make informed investment decisions that align with your aspirations. Hit the like button, subscribe to my channel, and please leave a comment. Market trends play a significant role in shaping investment decisions. A bullish market indicates rising prices and investor confidence, while a bearish market signals declining prices and pessimism. To identify these trends, look for patterns in stock prices, trading volume, and overall market sentiment. Staying informed about economic indicators, such as unemployment rates and inflation, is crucial, as they can influence market movements. Additionally, following market news and analysis helps you stay ahead of potential shifts, allowing you to make informed investment choices. By understanding market trends, you can better navigate the complexities of investing and position yourself for success. Conducting thorough research before investing is essential for making informed decisions. Utilize various resources, such as financial news websites, investment analysis tools, and market reports, to gather valuable insights. It's important to evaluate companies and industries by examining their financial health, competitive position, and growth potential. Understanding market conditions, including economic trends and sector performance, can also influence your investment choices. By dedicating time to research, you empower yourself to identify opportunities and mitigate risks, ultimately enhancing your chances of achieving your financial goals. Remember, informed investors are more likely to navigate the market successfully and make sound investment decisions. As a beginner investor, it's crucial to be aware of common pitfalls that can derail your financial journey. One major mistake is emotional investing, where fear or greed leads to panic selling during market downturns. This can result in significant losses and missed recovery opportunities. Additionally, be wary of get-rich-quick schemes that promise unrealistic returns. These often lead to disappointment and financial loss. Instead, focus on building a disciplined investment strategy. Remember, learning from mistakes is part of the process, so stay committed to your long-term goals and avoid making impulsive decisions based on short-term market fluctuations. Hit the like button, subscribe to my channel, and please leave a comment. In this video, we covered essential investing basics for beginners, including the importance of understanding different investment types, the significance of diversification, and how to set realistic investment goals. Remember, staying informed about market trends and conducting thorough research are crucial for making sound investment decisions. As you embark on your investing journey, keep these key takeaways in mind. If you found this information helpful, please like and subscribe to our channel for more valuable insights. We invite you to explore related content on our channel or website to further enhance your understanding of investing and achieve your financial goals.